We do these sessions every Wednesday afternoon after the close. Give everybody time to take a quick break, grab a bottle of water or whatever, and then we can go over any questions, topics, clarifications you may have in order to get everyone on the same page, because I know that what we're doing is probably different, sometimes 90 degrees different, most times 180 degrees different from what you're used to doing. Most traders are using lagging indicators. Most traders are chasing, reacting after the fact. Most traders need what they deem to be quote-unquote confirmation of this, that, or the other thing, and it's all backwards. And I know that's what you were doing or using or, up until now, and there's nothing wrong with that. That was the best plan that you had at the time, but it was based on what somebody else showed you or taught you, and we are trying to show you or teach you another way to do things, a way that comports with how the market behaves and how it disseminates and then subsequently uses the information that it produces. So we don't use any indicators. We don't use anything conventional. And every time I say that, we don't use anything conventional, it's usually followed by 5 questions of, well, do you use this? Well, do you use that? Well, do you use the other thing? All of which are conventional. So I just want to say off the bat, again, no, we don't use anything conventional. Why? Because this stuff doesn't work. How do I know? Well, could you make it work? If you're smart enough to be here, the market is not a complicated place. It really isn't. This is not rocket science. It is, however, counterintuitive. And by counterintuitive, I don't mean every time it goes down, you buy it. Every time it pops, you sell it. We do buy pullbacks when we are buying, and we do sell bounces when it is time to sell, but not just willy-nilly, arbitrarily, or more importantly, automatically. That would be silly. That would be foolish. By counterintuitive, I mean that typically the trader is operating on a set of logical principles that the market does not employ. The market operates on its own logic. Traders, and I've been doing this for decades, I've worked with thousands of traders. Traders love to approach trading on their terms, meaning they want to put it into a realm of understanding that comports to their way of doing things, the speed and fluidity with which they make their decisions, the instruments or indicators that they like to use to read it. Unfortunately, the market doesn't use those things, so you're never going to be 100% on the market's page. We're living a two-dimensional world here, market price-wise, so it doesn't matter what you use, how good it is or how boneheaded it is, there will be overlap. And I get that every once in a while, especially when someone comes to the free trial room, they'll say, oh, that time you said, it's an arbitrary thing here, 99.5. I had that. Okay, but did you have everything else? And did you have everything else every other day this week? And did you have everything else, meaning both ends of each trade, described more or less to the tick in advance today, the day before that, the day before that, the day before that? Probably not. And the reason is that because we live in a two-dimensional world, especially in a market that's broken down into quarter-point increments like this, like a dollar broken into quarters, at some point you're going to come up with the same target or level or whatever. It doesn't matter what it is or why it is. Every now and then there'll be a confluence there, and you'll have the same thing. That doesn't make what you're doing right or good. I just want to dispel that myth, because that can save you a month or more, or 2 or 3 months, trying to run down that road, trying to tweak what you used to use to try to make it match up with what we're posting. That dog won't hunt. That is a monumental waste of time. We're not using anything conventional, so if you're trying to tweak something conventional, you're wasting your time. What I'd rather have you do is spend your time getting on the right page. The single biggest factor in trading well is trading according to how the market moves or how it dictated it's going to move, the levels that it's dictated it's going to use, and the target that it dictates it's going to achieve on a trade-by-trade basis. And the best way to do that is to let go of the stuff that you used to use. That's probably the single hardest thing for most traders to do, because that's been their safety blanket, safety net, call it what you will. It's been problematic for most traders to think in concepts, even though the stuff that you were using to chase the market after the fact was so loosely based, and now what we're doing is so precise, then you get the transitional adjustment period, let's say, to go from taking 3, 5, 8 points risk to a couple ticks risk. And then traders want to focus on this tick or that tick. And that's where the problems come in. So these sessions are just for that purpose. I know what I know what I'm doing, and I know that I know what I'm doing, but that doesn't mean that you or anyone else knows what I'm doing or can see or understand what I'm doing. Part of it is the way I describe things. Well, part of it is the fact that I'm such a lousy dyslexic typist, for which I apologize in advance. But part of it is you're not used to seeing it described that way. And that's understandable. That's more than understandable. So these sessions are used to clear up that understanding. If you have ever read any articles about, traders and what traders would really like to have, the golden nugget, the one thing. Just give me that one thing, the holy grail of things. Well, I'm sorry to burst that bubble, but there is no one thing. There isn't 200 things. There's maybe 5, 8 tops, but, primarily 3 things, 5 things, 8 things, something like that you have to master with respect to dealing with the market. But we can't lump any one thing into any one basket. A breakdown and a line in the sand violation are different. One reverses the market, one just widens it out, but the same scenario is still in effect. That's why we call them different things, because they are different things and they connotate different behavioral traits within the market. So trying to put them in the same basket, in the same box, so to speak, give them the same term, apply them the same way is just a gross error. It's a monumental mistake. What is the need to do that? Trading is not easy. I can't make it easy. It isn't easy. It's never going to be easy. So let's get that fact swallowed, even though it may be a little bit uncomfortable. Excuse me, but it's not rocket science. Anyone can do this. Anyone. It doesn't matter how old you are. It doesn't matter your history. It doesn't matter even your trading experience. It doesn't matter your financial status or wealth. It doesn't matter your education or what level of school you completed or how many degrees you have or what your IQ is. It doesn't matter. It doesn't. It only matters if you're open to taking direction and to following that direction. We've said many times over the decades I've been doing this that children think in alpha mode. That's why they have fantasies, right? People can fly, and they could be a magic princess, or they could be a superhero, and they live out those dreams, and that's wonderful. And you don't want to take that away. but that's because they think in alpha mode. And Albert Einstein, I don't know, pretty bright dude, I think, said we need to spend more time there in order to really expand our capacity to learn and invent things. Adults think in beta mode, right? Transition happens as you start to grow up, I don't know, 8, 10, 12 years old. You start to think in beta mode. There's a time when you're still in alpha mode somewhat. That's why they don't let you vote or make contractual obligations while you're under 18. I can tell you that sometimes it lasts well beyond 18. I know people in their 40s and 50s that haven't fully let go of that alpha mode of thinking just yet. But you could tell a child, right, show them a light switch on the wall, don't touch that or the house will blow up. And they'll, ooh, put their hands behind their back, to get it away from the light switch. Ooh, well, I don't want to do that. What would happen if you told that to an adult? You go, dude, come on, it's a light switch. Well, where did that come from? Reasoning, logic, experience. It's easier to teach an alpha thinker about the market and what's possible than it is a beta thinker. And I'm not talking about alpha male. I'm talking about the two ways our brains, whether they live in that fantasy or logical world, right? Because anything's possible in the market. How many days were we in that small range? And when we broke yesterday, we said we're going back to 07 quarter. And when we get to 07, we said we could go to 92. And you're going, come on. And we're in the 40s, right? Not too long ago. Yeah, well, and did we? Yeah. Okay, why is that not possible? Who made that not possible? Don't touch that switch, man. The house will blow up. Come on, dude, come on. Talking to me now. That's the light switch. You just had the light on. I know that switch runs the light. You don't even have a furnace. Come on, right? That's what happens when you tell a logical, intelligent adult about a market phenomenon, behavior, target, what's possible. That kicks in, and their personal need to rationalize things and put things on their terms starts doubting, right? Now, if they have market experience and they've been using charts and indicators and studies and various forms of things or software or whatever, that's led them down a path. The path, nobody can make you do this. You've got to want to do it. Nobody can make you use something in your trading that you don't want to use. So if you think about that, everything that you've used, I like moving averages, to take a simple one. I like RSI. I like PSAR. I like Fibonacci's. I like Elliott wave. I like market profile. Whatever you've used, it's because you've gravitated to it, because you liked it, you went with it, it made sense to you. I'll bet nobody ever asked you, yeah, but does that make sense to the market? Does the market like that thing? No, but I do. Well, there you go. That's just dumb enough to be a trader, isn't it? Right? Market doesn't use it, but I use it. I even have people get defensive about it. I use this. Well, how's that working out for you? Right? Well, and then the BS starts, right? Win some, lose some. I do okay. How come you don't kill it every day? How come you can't have it mapped out ahead of time where we're going, from where to where, which does two things. It maximizes profit and it keeps risk really small. How come that thing, that magic thing that you like to use, can't do that if it's so good? Because it doesn't work. It's not that you're not smart enough. It's not that you're not experienced enough. It doesn't work because it doesn't work. If it did, you'd be killing it. So it isn't you, it's the thing that you're doing. So now I have to ask you, are you here to be right or are you here to be rich? In other words, Do you want to continue stubbornly to use the thing that you like to use that doesn't work and doesn't produce results? Or do you want to make a minor change, adapt a new way of doing things that does work in concert with how the market behaves, and that will allow you to get what's there all day, every day? This isn't a big change, but it has to be a wanton change. You have to dutifully impose this on yourself, and it requires a little change. You don't have to change who you are. You know, if you're an older, caring person, you don't have to go out and start becoming an NFL linebacker and trying to rip people's heads off. That's not the kind of change I'm talking about. I'm talking about how you approach the market, which is to say, with a blueprint, with a plan, with a map, ahead of time, so that you can say, I want to eliminate the impulses. I want to bring the stress level way down. I don't want to be grabbing my chest. I don't want to chase. Usually those are intertwined, right? You end up grabbing your chest because a trade is going against you because you chased. These are levels that we gave pre-market. I actually had the 99.75 in here, 98.75, which is also right here. It was early on, but okay. So if you look at that and said, we were saying to buy here and bounce here, and that was breakout, and I was really kind of doubtful that we actually truly broke out. But look at how we used these early on. Look at how we used this throughout the day. Bam, 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 bam. Look at how we use that later in the day. Bam, bam, bam. It would look, if you showed a chart like this, and these are levels. We gave them at 8 o'clock. Here's 8 o'clock, right? 91 is breakdown. Here's today's number. We would need north of 2106 quarter to break out, and we got one tick higher probe before the report. So, actually it's 10 o'clock in the morning, but the point is, if you showed this chart to someone, they would say, yeah, well, you know, you put those lines on there afterwards. No, we didn't. What's the purpose of having you go through this exercise? Trading fear, inaction, panicking, second-guessing, chasing, comes from the fact that you don't have a good map, that you haven't, to this point, been able to trust the market. The reason we have you write notes on a pad with a pen, yes, I know it's very Stone Age, but that has been proven over centuries to be the best way to get information from outside your body into your gray matter. Not by typing it. Typing is more efficient. Putting in your computer is super efficient. I'm not trying to teach your computer to do anything. I'm trying to reach you. I'm trying to have you see it. I'm trying to get you to finally understand it so that you can begin to trust the market and implement it. Cutting corners to do it in a more expedient manner, a more efficient manner of storing data. I'm not trying to store data. I'm trying to change the way you think about, even approach in the first place, think about, and finally, ultimately, interact with the market. You've got to learn to trust it. How do you trust it? You got to see enough examples. You got to say, okay, this is pretty undeniable that this isn't happenstance. This isn't just a coincidence. This is pretty much discernible. Markets are not random, not at all, not even a little bit. They change. They change all of the time. Otherwise, they would always do the same thing. But it is discernible on the front end. So if we have it mapped out on the front end and we interact with it, in other words, early on we had this. We said we could ultimately get a 97.75, but what was breakdown? 97, 96.75. So breakdown was in here. Breakdown was there. We probed it by a tick, 2 ticks, I think, over here before we got the follow through. But the point is, if we're buying it up against that and taking profit up here. Ideally, we never would have probed up there, and I didn't really expect to. So there were people who were short up there before it broke, and then on the break, they didn't lose anything. The more experienced ones might have given it some time, and I was posting at the time, I'm not sure that's a real break. We only probed it by a tick on light volume here, so I'm not convinced that it's a real break, and we should get a pullback eventually to retest the 97.75 area. Okay, what's that pullback low? 97 quarter. I said 97.75, 97. And we said you could still rebuy there, and then we were taking profit here, 2101 half, yeah. So even here on these bounces, we were taking profit. We eventually probed it. We bounced up here again. Eventually, we broke down. FOMC came out right here on this 2 o'clock candle down shortly thereafter. So today was not quite as crisp as normal. It was okay in the morning, then it got a little bit kooky, and then even after FOMC, it was almost like they couldn't make up their mind. There wasn't a great incentive to take it higher, but we said a couple times we could certainly bounce more, and we would need to take out 91 again. We took out 91 over here, and we had a couple of aggressive sales. Last chance, which we post, let me see if I can find it here. So no change in rates. I'm just trying to say where we could found the 95 quarter. Oh, I guess on report, I'm sorry, it was 201. I initially posted 99, and then later in the afternoon, or after the report had been out for a while, I think I said use 99 half. So I've just reposted it. See the time there, 1401, 201. 99 is one-time most aggressive resale, and it had already started to move away by the time I got that posted, so I posted lower sales. But over here on this bounce, see here's 2 o'clock, over here I said use 99.50 as last chance with short leash. Normal risk for us is point or so. Now, here's where it gets a little dicey. Most traders who came here before were chasing and taking much bigger risk and then changing their risk parameters when a trade didn't go against them, moving your stops and all that. Anybody that tells you they've never done that is lying to you. I've done it more times than I could count before I had the ability to understand the market the way it is and have such a good map. So everyone's guilty of that. 3-point losers, 5-point losers, 8-point losers, you know, that kind of thing. That is the norm. When you come here and we give you an accurate map that's accurate on both ends of every move, more or less to the tick, a funny thing happens. That seismic shift goes on in the trader's head, and because we're precise enough, the precision leads to a shift in that obsession to this tick or that tick. And you say, well, which is it? Is it a point or is it a point and a half? Or should I just make it a point and a quarter? And I'm going, where did that come from? You used to take 3 points, 5 points, 8 points risk, and now you're obsessing over this tick or that tick? Kind of funny if you think about it, right? Okay. It depends on your entry. Let's say, way away from the market, let's say we're going to buy up against a level of 10. Let's use 10 for a bounce eventually to 20. But we say 9 has to hold. 9 is breakdown. If we lose 9, then we no longer have an upside scenario. We have a downside scenario. So how much risk do you take? Well, a point or so. Well, what does that mean? What do you mean, what does it mean? Am I speaking Greek? What was that movie? Rush Hour? Right? Do you understand the words that are coming out of my mouth? If you enter 2 ticks in front of 10 and 9 is breakdown level, then you have a 1.5 of risk. If you enter 1 tick in front of 10, you have a 1.25 risk. If you enter at 10, you have a point of risk, right? So then the logical trader that always tries to put things on his terms instead of asking the market what it has for him says, well, then I'll just enter at 9. What if we only probe to 10? Even 1 tick through. What if we go to 975? The people filled at 10.5 are filled. The people that were working it at 10.5 are filled. People that are working 10.25 filled. People that are working at 10 filled. Maybe somebody working at 975 filled. So it depends on your entry. It's a point or so. But again, people get all wrapped around the axle of, well, should I make it 0.75 or should I make it 1.00 or should I make it 1.25? You know, I'm saying, dude, what is your problem? If the trade works, does it really matter? Well, no. Or if the trade doesn't work, does it really matter? Well, look, we're going to take it off. We're going to take it off if it doesn't work. So it doesn't really matter. Your job is to get them on where you're supposed to and get them off where you're supposed to and not worry about getting that last tick or obsessing over that last tick. That is a fool's errand. You don't make more money by getting that last tick. You make money based on trading more size. The only way you can make more money by trading more size is to get comfortable trading smaller size and earn the right by doing the right thing to ramp up your size. The only way you can get comfortable is if you trust the market. The way you get comfortable is you document it and then you interact with it in relatively close proximity to those levels. The level isn't gospel. The level is the best idea as dictated by the market. I don't run the market. I can't make it do anything. And you always have knucklehead traders that are going to buy the low or buy the high and sell the low and panic and chase, and you can get these little kooky probes, or big money is front running it big time and they want in because there's something coming down the pike that neither you or I are aware of, and it comes within a tick of that level and you never get filled at the level. Plus or minus a tick or two can't make a difference in your trading. It can't. It just can't. It'll drive you crazy. Because as soon as you consult you as to what you should do with your trades, you're all done. You're all wet. As I promise you, the market is going to punish you. There's too much you in your trading. Don't consult you, consult the market. That would be like you being a doctor and a patient comes in with a sore throat and you as the doctor say, there's nothing wrong with my throat, you're free to go. And the guy says, I still have a sore throat. And the doctor says, let me check my throat. No, still nothing wrong with my throat. It isn't about your throat. It isn't about you. It's about the market. We have to treat the market with respect. We have to ask the market what it has for us, and we have to interact with the market where it's said. It doesn't need your permission. It doesn't need your blessing. It doesn't need your justification, your rationale. It doesn't need to please you. It doesn't need to look right to you. No one's asking you. Just you. Okay? So I don't have any questions on the board. For those of you that are new here, welcome. Glad to have you. There's a white box on the GoToMeeting panel that runs the meeting. If you have any questions or topics or things you'd like me to go over and clarify, I'm happy to do that. I won't use your name, so there's no danger of you being embarrassed or whatever. I'm not here to scold anyone or make you feel bad. I'm here to get you on the markets page. So now would be a good time if you have any questions, comments, observations, things you'd like me to clarify. Happy to do it. Just scrolling through the list here. So we got Tommy R. Welcome. Stuart, I already said hello to. Ryan, welcome. Lemon. Good. So we got a pretty good turnout. James, glad to have you. He's in Silver Room now. Well, welcome to the Silver Room. Glad to have you. By the way, that room, the Gold, Silver, and Platinum room, stay open all week long. We close them for the weekends, but they stay open all week long, so you don't have to log off if you don't want to. All right, so we got one question. It says, I kind of followed your postings this morning, drawing all the lines. I had 16 lines on the chart. I had no idea what to do with them. That's fine, Tommy. It takes a little while. You're going to have your own on the trading pad section of the website is where we deal with what we think to be the best way to take notes and to place the lines on your chart. You'll streamline your own process and figure it out. So initially, if it's a one-time line or a one-time use level or something like that, just maybe make a little line like that. The ones I give you at 8, are these start at 8 are the important ones. Maybe make those full width of your chart, but little ones like that are fine. There's going to be ones way above us and way below us that may come into play if we break out or break down. So I know I gave breakout levels and breakdown levels and targets, but that's so you have the map ahead of time. The thing is, in the heat of the fight, one, I don't always have time to trade it, type it, post it, whatever, and fix egregious typos. So I like to give you the scenarios ahead of time, and then as things develop, I can tell you, okay, so this one's back on the table here now. We broke that, so that should get us to the target we posted this morning. You know what I mean? So if I give you that, let's just say we're talking about the 6 1/4. If I gave it to you at 8 in the morning, that 6 1/4 was potential upside scenario, and I said, okay, so over here, so you can buy this here for the 6 1/4. What 6 1/4? What are you talking about? You already had it, okay? So that comes with time. Thanks, James. I will tell her that you hope she feels better soon. That's very kind of you. Let's see here. We've got a couple things. Good question. Do you take the lines off after a certain condition? I don't think that much, and I want you to stop trying to impose quote-unquote conditions on anything, okay? More traders than I could number are always trying to think too much, do too much, impose too much, structure too much. Structure by me, what I mean by that is come up with structures or matrix or scenarios or whatever. I can tell you right now, the single biggest problem brought on in most traders trading is from backtesting, because they go back and say, well, last time I did this or it did that or I should do that or whatever, and then they take that into next time. Well, sorry to tell you, but next time has nothing to do with last time. So that thinking is really more crippling than anything. You'll get used to it. My lines kind of last throughout the day like that. As you scroll on, they fall off. Let's say we come in tomorrow morning and this 91 is still important. Well, then I'll just do that. But I make my chart, and I'd like you to make your chart so that you can encompass the whole day, if that's possible, if you've got enough screen size, on one day, so that you're not changing things. That's another thing most traders do, is they change time frames, or they have these fixed or varying time frames, or what, they're all over the map with that stuff. You invariably miss something, and the time frame doesn't make the target. That's a fantasy. That's a fallacy. That's incorrect. The 97/9675 breakdown level was breakdown on any time frame. The 2106 quarter level was 2106 quarter on any time frame. So changing, using, doing whatever. So just make one simple, just a simple 5 minutes chart with no indicators, starting at 8, that'll go through and grab the whole day, meaning 16:15. And if you've got enough screen space to do that, then you don't have to do anything. Just put some lines on there, make some little ones. If I say you can use that as a one-time, whatever, then you put it there, kind of thing. So if you have them pre-constructed in the morning, if you say make a variety of lines before 8 a.m. and just have them stacked up right here, and let's say something like that, and then you can put them on your chart as you take notes. You can even make some little ones here. You can make green ones or blue ones for buying and red ones for sells, scalping, or taking profit, or whatever. You know what I mean? It's you'll get to develop your own shorthand. What I am trying to get you to see from a generic standpoint is that you can have it all mapped out, that the market does have logic, so that you're not running around like a headless chicken, that you're not chasing your tail. I want you to get used to, okay, it's going to pull back to here, and that pullback is for buying. What would most traders do, right, when they come in? Oh my God, the sky is falling, we're going to go down. Says who? You conjured that up in your own head, that we're going to rip, 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 rip down, right? Because why? You got yesterday in your head, and look at that red candle, and that's what I want to move you away from. That's the kiss of death. That's poison. It's wrong. Okay? We gave you, here's 8 o'clock, that if we pull back to those levels, it's for buying. At least to start off with. It may change as the day goes on, but you got to start somewhere. So, yeah, but look at it. Look at it what? What does that have to do with anything? I don't want you to deduce your own conclusions. Your conclusions don't run the market. Your conclusions don't make it do anything. All they're going to do is make you believe something that's probably not the case. That's what I'm trying to pull you away from. It's not a condemnation. It's not a curse. It's not a scolding. It's a, hey, you got suckered into doing it the wrong way, chasing, panicking, etc. I'm trying to get you to do it the right way, the way the market says it said it's going to pull back to here, and then it will bounce. So we don't look at candles like that and say, oh my God, the sky is falling, because that's deducing a conclusion based on that. We look at that and say, great, it hit our level. I'm going to click buy, and I'm a happy cat. Okay? That's what I'm trying to change. So I want to caution you from putting too much you in your trading, consulting you. In other words, asking, what do I think? Let me think about that. Based on what? No amount of thinking by you is going to change what the market does, believe me. All you're doing is causing yourself to have doubt, giving yourself hesitation on entering, second guessing yourself, et cetera, et cetera. It isn't real. And that's where the boogeyman in your subconscious comes from. is these fantasies of horror stories that you've written that haven't played out yet. Okay? But you have to get used to it because it's different. 99+% of traders chase. They're reactionary, impulsive, and they chase after the fact. They don't have a good map. And the ones that think they have a map, they're deluding themselves. My number two pet peeve with traders is the overuse and misuse of stops. Do you know what my number one pet peeve is? Set ups. I hate that term. I hate that term. Setups. I'm looking for market setups. What does that mean? Is it a knife, a fork, a spoon rolled up in a paper napkin with a little sticky piece of paper around it to hold it together? That's what a setup is as far as I'm concerned, right? I'm looking for the market to set up. I want the trade to set up. That means what that trader is telling me is they can only see a trade if it looks like a certain picture. It's like having the FBI's most wanted list. You got 10 guys. And anytime you arrest a guy for stealing a car or robbing a bank, the only things you got are these 10 pictures at the post office, right? And you go in and say, nope, that's not him. Nope, that's not him. Nope, that's not him. Nope, that's not him. Must not be him. You're free to go. Wait a minute. Aren't there other guys committing crime? Guys, girls, people, whatever, committing crimes other than those people? That's what I have. That's my list. If it doesn't look like one of these things, I'm dead in the water. They could sit there for 3 days waiting for their quote-unquote set up. That is someone that does not have a grasp at all of how the market works, how it behaves, how it generates the information that it does. And quite frankly, if that's the best they can do, that they need it to look like a picture of two dolphins or a picture of a butterfly sitting on a flower or some other cockamamie thing, that they need it to look like before they can trade, they are not traders. They are order takers. Big difference between a salesman and an order taker. I've had plenty of salespeople work for me in my past life. I had a guy that he ordered his desk accessories out of this catalog, and he had to have this and that, and he had the embroidered cuffs on his shirt sleeves, and he had cufflinks, and he had to have, the right Armani or Versace tie, and he had to have this, and granted, he's selling, $500,000 to $1.5 million pieces of equipment for me, and that's all respectable and nice and all that, but the point is, he had to have this perfect scenario. And then I had this other guy, Ellis, who was kind of like a better-looking Mr. Bean kind of character. Okay, so we bought one of these things that we were selling. We paid like $650,000 for it, let's say, and we had it for sale for $850,000. Philip, the first guy, would come in and tell me he did all the market research to tell me why I had ours priced too high and I needed to take less for it in order to make it easier for him to sell. Ellis came to me and said, what do I get if I get more than $850 for it? So you get your standard commission up to $850, and I'll split anything with you over that. Incentivizes him to do. He didn't care. He didn't care what Don down the street had. Well, Don down the street has one for X number of hours on it, and it has and he only wants $795 for his. We need to come in at $775. We need to. We need to. Why am I telling you this story? Because it goes to mindset. The weak guy needed help selling it, even though he had all this perfectly structured, office appointments and clothing and all that. The other guy, He could care less if he'd do it with on the back of a napkin with a crayon in a phone booth, because he didn't care about what it looked like. He wanted the result. The other guy, whose ego was involved, cared immensely about it, what it looked like. I can't tell you how many times he corrected me and other people in my office that his name was Philip with one L. I go, your parents are dipshits then. Doing that. Your parents, because everyone else on the planet spells Philip with two L's, and I did it without knowing. Now you're correcting me. It's Philip with one L. Why don't you just change your name to Philip with two L's? You know what I mean? Well, that's my ego, right? I mean, seriously. If I'm going to pay you $1 million a year, but I wanted to call you Bubblehead, and I made you change your name on your driver's license to Bubblehead for a year, would you do it? Depends on how attached to your ego you are. And of course, these are ridiculous hypotheticals, the Bubblehead part, but the other part is 100% accurate and true. Okay? What I mean is it goes to perception. Are you here to make money, or are you here to be right? And I promise you, the greatest bulk of traders are trading to be right. They're going to do their thing and keep doing it, which means that those guys got creamed yesterday, buying it all the way down. And today they started off selling it, and then they got crushed because it spiked up, and then they, they're always on the wrong side because their stuff is late and it doesn't work, but they won't give it up because they've got their initials embroidered on it, so to speak, right? Versus, who cares? Who cares if you do it this way or do it that way? You want to make money? Then do it this way. Or are you that attached to what you do because that's your identity? That's who I am, man. Well, it's not going to work because the market doesn't care who you are. The market doesn't care who I am. I'm not here to be right. I could have the best buy-side scenario. Well, we started off on a buy-side scenario yesterday and today, and they worked, and we caught some buy-side profit. But how much did it take me to switch to sell-side? Violated breakdown level by one tick. Great. Where do we sell? Boom. Just like that. That's flexible. That's exactly what that means. So, in answer to the last question, do you take the lines off? If it's never used or whatever, but if a market uses it a lot, I'd probably keep it on. If we keep referring to it in the morning with a reiteration of today, and I reflect on those levels again, might be worthy of putting it on. People ask me, why do you do that? Well, because A, I want you to have a life, and the market keeps going even though we leave our screens. I want you to go have fun with your family, do whatever you do, because you'll burn out if you stay focused on the market 24/7. So I want you to cut loose, do other things. Come back. I give the reiteration, one as a step-by-step play by play, so that you say, well, I had a question about Monday, but I don't want to wait till Wednesday about what did we post, or what did he have there, or what did we say, or how would that have been used. So I try to give an all-encompassing overview. Yesterday, first of all, welcome back from your life back to market, meaning first thing in the morning, good morning. Yesterday, we started off with this. That's right, I remember we used that. Then we did this. That's right, I remember we used that. Then we said if we break this, that's going to change everything. Great, I remember that. The first probe down didn't quite break it, but we gave an aggressive sale anyway to test it. And then on the second test, it broke. That's right. And then we sold this bounce, and we sold this, and we had this for a downside target. That's right, I remember that. But remember on the bounce, we said use this, use that, use this, use that. And we hit all of those? Right. Okay, today we still have this one. This one's still valid. This one is more like, 24 and 75 instead of 25 quarter, or whatever the case may be. That's why I do that. And then I say, okay, so for today, here's what we have. And remember, today is today. Yesterday was yesterday, and they're not the same. If you backtested, for example, just go backtesting for 1 second. If you backtested what you did yesterday and tried to implement it today, you would have been crushed, because today was vastly different than yesterday, just as a one-off example. So hopefully I answered your question. James says, thanks, you're welcome. Let's see here. Same guy asked, not James, but what is your coding wording for those little lines? Which ones? The little short ones? I don't know. I don't have a coding for it. This is pretty simple and straightforward stuff. It's just like you and I having a conversation. I'm not speaking in coding or wording. I'm describing market behavior. It's probably different than the way you used to think about it, so it's going to be a little different than what you're probably used to. So I'm not really sure what lines you're talking about, but you can ask again. He says, for example, the line you have at 99. Oh, I just made it thinner because it was just more of an interim level. The most important level was the 97.75, today's number, and the break, meaning losing, taking out 97, 96.75. So we use these early on just as a one-time, but I would make them shorter if they're used just, like a one-time thing, because I usually will post, we got a one-time most aggressive, then I wouldn't make a big long line because it may not be valid for the rest of the day, just the one time. Okay. During the noonish time was crossed a bunch. That was still on play. The 99 during noonish time. Yeah, but it wasn't valid then. It was valid over here. We didn't mention, did we post anything about it? See, here's what you're doing. Okay, I can tell you now. We have people come to us with various afflictions, and you've got one of them. Is Dave here? BRNDSV, SV, whatever, from the Silver Room? I don't think so. Sometimes he can't make voice chats. He's got the exact same thing you do. Okay, which is to say that you are trading way in your head. You are trying to make, were there any posts around noon? Any posts around noon at all? Yeah. Why weren't they good enough? Because you put a line on your screen way back here and you won't let go of it. You're like a pit bull on a tube sock. Okay, things change all the time. So we used it over here. I never mentioned it over here. I mentioned 21.5 from the time we were buying back here. We used 99.75 over here. I think we used, 98.75, 99. We used them for buying in the pre-market. Back here, we said we could pull back to 97.75 again. Okay? Here's the thing. This is going to be an affliction of yours for 6 months unless we address it now. So, I'm saying this informatively, respectfully, and I'm trying to help. You are way inside your own head. You are trying too hard. We call it pedaling too fast, trying to get this, which is admirable, but you're trying to deduce your own conclusions based on the handful of questions you've asked. I appreciate your enthusiasm. I can sense your passion, but I'm going to tell you the road that you're running down, trying to come up with your own answers, is going to lead you to more frustration. So, 1, keep it simple. 2, please ask. Ask beforehand. You can ask in the Silver Room. I used to ask every day. I've asked every day for years. Anyone have any questions? Nobody ever asks. It's just kind of assumed if the market's quiet enough after first hour and a half, just ask. If you have a question, say time for a question. And I'll say, yeah, you can post it. I may not get to it here for a few minutes, or not now, or yeah, shoot. So I'd rather have you ask and have your questions answered so that you don't go there. But we have one guy who isn't here, because he would be laughing. He's coming out of it, but he was, I kept having to tell him, Dave, put the micrometer away, put the calipers away, put the calculator away. I mean, he's obsessing over the most finite detail. I get asked by those types. Sometimes when you post bonus money, you post $3 signs, and sometimes when you post it, you post $4 signs. What's the difference? The answer is how many times I hit the key. There is no difference in implication or implied meaning. Whatever you're drinking for coffee, I want you to cut it in half, okay? I don't get that deep. You're getting way too deep, okay? It's not necessary. Keep it simple. Every post in some form or another, meaning I may have mapped it out earlier and I'm referring to it now. For example, if I say, use the 9875 over here for eventually a 6 1/4 test. And we buy 98 1/4, which was not long after 8, and here we are over on the open, and I say you can use 99.75 over here. And a trader like that would say, well, what's that for? The same target, man. Nothing's changed. Well, I just thought you were pedaling 600 miles an hour in your own head. Nothing has changed. I don't post just to post. I post when there's a reason, and most importantly, I post when the market gives us new information. No new info, no new posts. So every post is reflective in some way, some form or another of from where to where. The move we're trying to capture. That gives direction, that gives target, that gives range, so you can have an idea of risk reward. Might be an 8.5 point target, might just be a 3 1/4 point target, might be a 12 point target. Okay, so you've got that. We'll never post a buy above where it's trading now, and we'll never post a sale below where it's trading now. So if it's beneath us, it's either a pullback target for TSP or a buy side entry based on the context in which it was posted. What did we say on the day? What did we post otherwise? We trade off of the story. The levels are just where. Same guy says, that's what I'm trying not to do is make stuff up. I simply don't get your trading language. Well, that'll come. That's why we give you 2 weeks here. It usually takes, today's your second day, it usually takes 3 days before it starts to gel, because you start to relax more. You start to do less work. I don't want you running all over the place and doing a bunch of calculations or movements or changing charts or moving things around or doing whatever. I want you to do less. Sit back, read. Just think of it as this type of format where I'm saying when we start the day, well, we can use 99.75, otherwise 98.75 for a bounce back up, but north of 5 1/4 will be bonus money. So we should buy it here. What did I just say? Same guy saying, I don't get your trading language and what to do about it. Okay, so first things first, I don't want you to do anything about it. I don't want you to be thinking about doing anything about it. That's part of the problem. I'm trying to teach you a whole new language here, and you're trying to rush ahead and read the menu and order dinner for everyone. You're not there yet. I don't want anyone in the free trial room or recent converts to the silver. I don't want anyone trading live. I don't want anyone trading in demo. I don't even want you trading in your mind, saying, well, I would have bought here. You're not ready for that. You need to understand the post, frontwards, backwards, inside out. I promise you this. The more you slow down and the less that you do, And the more instruction you take, which is to say, go back and review the trading pad section again, please. Sounds like you're putting the lines on your chart. That's good. And watch the market play, connect the dots without asking yourself, what would I do here? Which is followed immediately by, how much would I have made? Okay, that's what traders do. They entertain themselves. You're trying to run before you can fly. This is a different format. It's a different way of doing things. It's a pro trading environment, deep into the pool. You got to let go of the stuff you were using before you came here, and that takes time. You got to get used to and in sync with how we describe what the market's going to do, and that takes time. So just put on hold your desire to want to implement them before you understand them. That will be frustrating, and it will slow you down, and you'll end up wasting a lot of time. Just relax. You've been trading for how long, and you haven't been able to make it work? What's a couple of weeks here? If you just put that on hold, slow down, and take a clean sheet of paper and start over, okay, in a manner that is in sync with how the market does behave, not how you wish it to behave. That's the difference. He said, okay, thanks. You're very welcome. Okay, good stuff, good questions. I'm sure that there were other people that benefited from what you asked as well. So kudos. I know it's not easy to put yourself out there, but I made it a new policy where I don't use anyone's name other than someone saying hello or whatever, because I don't want anyone to feel bad. I don't want anyone to, I don't know what you don't understand unless you ask me. So I don't want anyone to be afraid to ask. I don't know you. You're just a name on a screen and nobody else here knows you. But I took it one step further. If I don't use names of questions asked, then nobody's going to get embarrassed. And I don't want you to be embarrassed. But you got to let go of the stuff you were doing because it wasn't working for you. I'm not the one that taught you that. Somebody else did. I'm not the one that put you on that path. Somebody else did. My job is to get you off that path and get you on the path that the market is on. Our job as traders is to be malleable, to be flexible, to get on the market's page, not expect the market to get on our page, which is exactly backwards, but that is exactly what 99% of traders do. I have this set up. Really? Well, by the fact that you use that term set up is telling me that they don't know how the market behaves, so the validity of their setup is in dubious question as it is. Yeah, same guy says, I'm loving your attitude about all this. Well, it's real. It's reality based. And so, you know, I'm not any better or smarter than anyone else here. I've been doing this for 25 years. Whatever you've suffered loss-wise in the market, just add some zeros to it, okay? Nobody should have to go through what I went through. It took me 10 or 12 years to figure out how the market works for real and how it generates the information that it does, and it cost me close to $1 million of my own money. I'm trying to shortcut your learning process if you will listen, okay? So I appreciate that you appreciate it. It's reality-based. It's not condescending at all, but most people can't handle the truth. Just ask Jack Nicholson. Okay, that's all I have on the board. So we got a few reports tomorrow. I know we got initial claims. Let's see what else we got here. What do you got? What do you got? What do you got for us here, Mr. Market Man? Tomorrow is the 3rd. Yes, we have Challenger job cuts at 7:30. Initial claims, continuing claims, productivity, unit labor costs, 10 o'clock factory orders and ISM, and then nat gas, and then Friday. Oh, I thought that was next Friday. Wow. We got monthly unemployment info on Friday as well. How about that? So should be a action-packed rest of the week. Plenty to do. Glad I looked. I mean, I would have looked tomorrow, but I'm glad I looked. Forgot all about that. I thought it was next Friday. Mike says, thanks, HD. Have a great night. See you tomorrow. You as well. Okay, everyone. Lennon says, as always, these sessions are very beneficial. Oh, I'm glad. That's why we do them. Don't be afraid to ask. You'll shave months, maybe years, off of your learning curve if you just ask me. I know what I mean, but that doesn't mean you know what I mean. And that isn't your fault. I could do a better job of explaining it if I used wordier explanations, but I don't have time. Market doesn't give us time, and I'm not that great a typist and all that. So I abbreviate things in an effort to be fact-based and concise. I don't want to rob you of any information. There's actually a lot of information contained in each post once you get it, but getting it is the part that's a bit tricky and cumbersome. So I understand that, but I don't know what you don't know unless you ask me, and I'm happy to explain it. Okay? Thanks for coming, everyone. You're welcome, Tom. Have a great night, and I will see you at 8 a.m. Good night, everyone.